Welcome to the 2020 Preach to Me Economic Recession Survival channel. Well, it seems that things are starting to get back to normal, right? We have another rate cut coming before the end of the month by the Fed, and we're at the lowest unemployment at 3.5% in 50 years, right? Everything appears to be booming according to all of the statistical data that the analysts and pundits and even the president himself has tweeted out the success of this economy. Well, but underneath the surface, we can understand that the latest Pew Research article tells us that for most U.S. workers, real wages have barely budged in the last 40 years. We have not seen real wages increase in the last 40 years. Let that sink in. Even though the nation's private sector has been adding jobs for the last couple of months here, uh, we've had 1.5 million jobs added since the beginning of this year, and that would prove that there is a strong labor market. Wage growth expectations have been lowered, accounting for an increased inflation. Your dollar has about the same purchasing power it had 40 years ago. And so most of the wage gains that have been experienced by the American workers have gone to the highest tier, the highest paid of American workers. In other words, those that make over $150,000 to $180,000 a year in jobs. Okay, those in jobs making that. So even though Americans' paychecks are bigger than they were 40 years ago, meaning that many of us, whether retired or not, have gotten such things as cost of living increases or COLAs or promotions and 2% to 3% raises. Inflation is real inflation, even though the Fed says it's at 2%. Real inflation now is running at about 7 to 8% when we account for the CPI index, which measures food and energy costs. That is not accounted for in the numbers that you see released by the Fed. So, if your real wages have not risen for most Americans, and we're in a stagnant wages environment, and this is coupled with the fact that mass layoffs for 2019 are still continuing as companies such as Forever 21 filed for bankruptcy, Home Depot and Lowe's, HP is going to be laying off people soon, uh, and other companies who are going to be laying off and downsizing their payroll and benefits roll, that leads to a recession or depression. Okay, so the only two options that Americans have is to either get another job, a side hustle, such as maybe working for Uber or Lyft or Instacart, delivering groceries to elderly people, or even on the side selling things on eBay or Amazon to help make ends meet. Is that really the life that you want when you're 50, 60, 70 years old, hustling all your life just to get a piece of the American dream that should have been yours well long before? And with a growing number of college students encumbered in $1 trillion student loan debt, that coupled with the fact that many of them, millennials and those younger, cannot start life in the positive net worth, but with a negative net worth in the tens of thousands or hundreds of thousands of dollars, leads to a stagnating economy. This coupled with the fact that a global recession and or depression is imminent in 2020, probably just before the elections or after the elections, because in America, we have 340 million people, okay? But all of that 340 million people, only about 120 million are in the workforce right now. That's from age 18 to 67, okay? So, if you have only 120 million people working, and you don't have that many jobs and consumption is down, how is your economy going to be able to grow or sustain itself when 70% of the American economy is based on consumption of goods and services? Well, when people are not working, when people are not consuming, then that leads to a recession and depression automatically. China doesn't have that problem. China, although they have 1 billion people, they have a much larger production and manufacturing workforce. Their wages can sustain their economy because they have one of the fastest growing economies in the world. As a matter of fact, in the next 5 years, China may overtake the United States as the number one world economy based on consumption of goods and services produced and delivered to other countries. So, and that coupled with the fact that Americans have no emergency savings whatsoever. This is according to a report by Bankrate.com. It says that nearly 3 in 10 U.S. adults have no emergency savings. Well, duh, there is no money to save after high housing costs, rent mortgage, commercial rents for those who own small businesses and those who are in renting or mortgages are high, and also high car payments. The average car payment now, I don't know if you know this, is $550 or more for a new car. And this is over 6 years, 72 months, or even 84-month loans. So debt, no savings, and even if you have savings, even if you're one of the not one of the people that are 3 in 10 that don't have emergency savings, even if you have savings, you're only getting 50 cents or 20 cents on it on a dollar because the rates are so low. Interest rates are so low that you can't even make money off your savings. So they're forcing people to gamble in the stock market. As a matter of fact, some traders are offering, such as E-Trade and brokerage, stockbrokers, offering $0 commission trades this month because they want everybody to be suckered into these markets as they continue to blow, inflate the bubble. Do not be one of these people that's going to be suckered into the stock market and when it crashes, because the business cycle tells us that a crash is imminent. It is coming. Okay, so stack your cash. Cash will be king in the beginning. Those dollar bills, I know they say there's going to be hyperinflation in the world. The dollar bills are going to be worth something in the beginning. Stack your cash because in India, I don't know if you heard, but as of yesterday, October 4th, they had a PMC bank in India. Google it. They had a banking crisis, okay, where they had placed withdrawal limits on their customers in Mumbai, okay, that uh, the banks could only withdraw 25,000 rupees per person. That's something on the equivalent of $300 per person, US dollars, that they could withdraw limits. So they place withdrawal limits. That could be coming to some of the smaller banks, not Bank of America or the big banks too big to fail, but some of your smaller banks could be placing withdrawal limits as we uh, have liquidity problems as we near closer and closer to the date of reckoning for this economic slowdown and recession to hit in America. ABC, MSNBC, they won't be reporting this. Bloomberg, they won't be reporting this until we're already 2 quarters or 3 quarters into this recession and or depression. Okay, so this very well may be not until the summer or after the summer of 2020 when they start reporting that things are actually starting to slow down. But we can see things already slow down around the world because everybody is in negative interest rates right now, besides, guess what? The United States. But it's coming. It is coming, my friends. So, to shore up your position, cash is king today, my friends. You want to save as much cash as you can. Of course, after you've topped off your preps, food, water, medicine, supplies is critical, okay? And transportation. So you want to do that. Don't feel like it's too late to start. It's never too late to start, okay? Actually, they've been giving us time to start because of all these different distractions that is going on with the trade war and all of that. But once again, the thing that is going to take us down is going to be this massive debt load coupled with Americans with no savings and no real wage growth. Nobody's talking about that. Paychecks have not been rising for most Americans in the last 40 years, since 1978, okay? So if you're not getting paid less, that means Americans are going to be consuming less once the music stops playing, probably after Christmas. Enjoy this Christmas, but after this Christmas season, Americans are going to realize they don't have much money to spend as gas prices and everything increase and food prices increase. You go to the store, you get 2 bags of groceries, 4 bags of groceries, it's $70, $80, and you've got nothing, okay? Not you haven't got like I haven't bought a pound of chicken or fish or steak or anything like that. You're just getting can of bean and rice, cornbread, a couple of pancakes for the kids, cereals. There you go. You're at $70, $80 just like that. That's the power of wage growth not keeping up with inflation. That's what happens, okay? In Venezuela, as you know, they're still using the bolivar, even though it's highly inflated. I think inflation's like around 20,000% or something like that. But they still use it because the guy said they have no alternative unless you want to go into cryptos. They have no alternative currency to work with. So, my friends, get prepared. Start stocking up on food, water, and medicine, supplies, toilet paper, batteries, candles, LED lights, solar power generators for your phones and your electricity needs. Because these bank withdrawal limits, all of this stuff is coming. It's going to spread from the east, meaning from India, China, Russia. All these countries are broke. Eurozone, after the Brexit deal, is going to fail again. That's going to drop their markets lower, and then it's going to come over here to the United States. The United States will be last domino to fall, but it will fall. It will fall. It is inevitable. So, my friends, stay safe. Continue to keep informed, and we're going to continue to bring you the latest news to how to survive this 2020 recession and or depression that is on its way in the next 12 to 14 months. So we want to get you prepared. Thank you for joining me today, and I look forward to sharing more with you in the next video. Have a great day.